Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your Wednesday edition. We've got so much to talk about, not just from the Fed announcement, but also all the great earnings. And I'll get to that near the end of the show, and I optimize my time with my guest here today. You know, I don't usually bring on a lot of guests on this program. I have to trust and understand that they're delivering something of value that's going to ultimately help the end user here, which for me is going to be you guys. And hopefully that will be something that is going to be evident here today on how useful and beneficial this is. You also know that I'm not a person that necessarily wants to take shortcuts, but if I can find a way to expedite a process, if I can take a series of actions, let's say 3 or 4 different actions that lead to an end result, if I can somehow find a way to combine those actions into one action, all I've done is increase my efficiency, I've increased my productivity, and of course I need to make sure that the output there is fine. But ultimately, as a trader, that's what we're trying to do. We're trying to optimize our time, trying to make things as efficient as possible so that we can go do other things that we enjoy in life. So as I was at this Traders Expo in Orlando, I wander around the exhibit hall, and there's a lot of good people there. There's a lot of, average people, and there's a lot of charlatans that are in these exhibit halls. Well, Kim Gittler grabs me by the arm, and she's like, "You've got to talk to Toby Wade. You've got to talk to him." Okay, fine. So she literally drags me over to speak with Toby Wade. And I had a conversation with him, and I must say I was pretty wowed. So let me give you a brief introduction on who Toby is. He was the head of primary research at predictive analytics at Bank of America, so he's got retail institution side stuff on his brain. He was the head of machine learning at Gemini, which is fantastic. Now you got the AI combined with machine learning. He's a professor of statistics and data science and the director of AI at Crypto Institute at the New College of Florida. And just when you thought you couldn't give him enough accolades and experience, he is the CEO of I had it right here in my face. DeepVest. I had the name in my mind, but it switched on me. CEO of DeepVest, and I actually got a chance to meet him and his coworker Tan in Orlando, and that was pretty amazing. So, without further ado, let's jump right into the program today and talk with Toby Wade of DeepVest. Toby, how you doing, my friend?
Yeah, doing awesome. Thanks so much for having me on the show.
It's a maiden voyage for you, isn't it?
I know that this is my first time doing a podcast, so you promised to take it easy on me.
We'll go easy on you. Tell me a little bit. I'm fascinated by the whole AI thing. I have so many hypotheses about what could happen in the future with AI. Walk me through your path, because obviously you started Bank of America and then moved to Gemini. I mean, those are almost opposing forces right there, crypto and traditional finance. So walk me through your kind of evolution into this world and up to DeepVest.
Yeah, I mean, essentially, I've been a quant on Wall Street for most of my career before all that happened. So I've covered most of the asset classes, been a portfolio manager, trader in risk and research. So I've sort of seen all the whole spectrum. But throughout that whole journey, I've always been focused on statistics, machine learning, and neural networks and all that type of stuff. And before then, it wasn't quite as sexy, right? So dealing with all that stuff, and now suddenly, as you go, fast forward to where we're at now, everyone's an AI expert, right? Yep. And so now you sort of see this massive, exponential growth into the space, and there's a lot of hype. But still, at the end of the day, AI just it boils down to back down to statistics, right? And just multiplying weights and numbers against each other. If you really break it down at that fundamental level.
Mm-hmm. And then building out models. And I would imagine that when you were at Gemini, let me ask you if you can, what kind of models do you build for a crypto firm? Is it order flow models? Is it predictive market models? I mean, is it from a risk management perspective? How does that work over there?
Yeah, so Gemini was probably a little bit less on the trading side, if I'm honest, because it's primarily an exchange.
Right.
So their primary purpose is aggregating different market makers together, and so there's no necessarily trading algorithms as such, because it's the whole FTX thing happened, right?
Right.
So there's clear lines in terms of delineation there. But certainly prior to that, my whole career at Bank of America, we produced a bunch of research reports, trying to use alternative data. At one point, we were scraping Glassdoor reviews, for example, to try to grab sentiment from Glassdoor reviews to try to make predictions on long short portfolios of stocks.
Nice.
Just an example. But yeah, and then back before I was an intraday FX trader, had a portfolio of a G10 FX portfolio, and had a blend of momentum and mean reversion models and and so forth. But yeah, I've dabbled in lots of different machine learning models, kind of cover them all, and then now of course I'm teaching them as well.
Right? Yeah, professor.
Yeah.
Okay, so you worked for two extremely prominent firms, and there's definitely some others along the way as well. What prompted you, like the pun, see what I'm doing there, prompted with the AI thing? What prompted you to kind of jump ship and say, you know what, I've got this idea, or I know you have a couple of different co-founders as well, so it wasn't exclusively,
Yeah.
but what prompted you and your fellow co-founders to go, you know what, this idea that we have, and we'll talk about that in a second, let's break apart and do this on our own, because doing it on your own is a pretty impressive feat.
Yeah. I mean, in part, it's probably a couple of different ideas that came together. If you think back, when you have to try to back test something, back, even when I was at B of A, you're dealing with these legacy systems like something like a fact set, which would, take days or weeks to try to configure and get it just right. And then if you didn't know the right syntax, the whole thing breaks on you. And it was like a very frustrating experience. So that, I knew there was like tons of pain points. It gets very frustrating at certain points and time consuming. And then, as I, saw this exponential growth curve in terms of the generative AI techniques, and combine that with, I wanted to lean into an area where I do have a lot of experience, like with investment research and in trading. And so lean into my skills on both of those. And try to build and start building out the tool. What we currently have is DeepVest. But yeah, and part of it's just the journey initially started out us just building stuff we thought was cool, and we're like, hey, can we actually connect a natural language? Can we go from like a natural language prompt to a back test? We're like, can we do that? And then it turns out yes, we can. And then you just keep on building, and we kept building, more and more stuff on top of that until the final culmination of what we have now. And then it'll keep getting, what you see now will just be like, 100x better in like a couple weeks or a couple months.
Right.
So we keep pushing out stuff pretty fast.
So if I was to say, give us an elevator pitch, like what is DeepVest, right? And you kind of hinted at a few different things in there. But for my audience and people watching the feed here, what would you say DeepVest is designed to accomplish for the user?
Yeah, so the main, the easy analogy I've been giving is, if you think about if Bloomberg and ChatGPT had a baby, it would be DeepVest, for example, or an AI native Bloomberg solution. So those are just kind of like the easy, way to understand it. But if you start to drill in, what is that? What can we do, and why? Where's the value coming from? So as I kind of hinted at before, you can basically go from what used to take days and weeks down to seconds and minutes in terms of performing investment analytics. So think of things like portfolio construction, back testing, stock screening, stress testing portfolios, individual stock research. And kind of push the boundaries on that front. And then not only that, as I can show through the demo, we're actually connecting to real data underneath the hood. And then also we're calculating all the investment calculations on our side with the team of investment agents and the whole like agent orchestration framework. And sort of achieving it in that sense. So at the end of the day, we're basically what we've built is think of it as like an institutional grade stack behind a natural language prompt. Mm-hmm. So we have like literally some of the top hedge funds are reaching out to us to try to trial this, all the way down to self-directed investors. So it's pretty awesome to kind of like try to democratize these types of tools for everyone, right?
Absolutely. And when I was looking at some of the demo pieces you were giving me, in my mind, I'm like, I could do this myself. I could get this data, I could get these solutions, I could get these charts myself. But the fact you did it in under like 15, 20 seconds, and it would have taken me days to get all that information I needed is what really kind of turned me on to this. I was like, well, listen, this from an efficiency perspective can help significantly. What I want to make sure the audience understands is this is not a tell me what to buy type platform. It's not a, hey, what's going to make me the most money in the next 30-day type platform. It's you need to come up with the prompts and say, hey, let's go through the Magnificent Seven, all right? And give me XYZ analysis of Magnificent Seven, and you will see just a phenomenal amount of data. So I guess I will leave it there, and maybe you can share your screen and show us here. So I've got it. I'll bring your screen up for us. And then kind of walk us. There's so much that it can do. I guess you kind of have to walk us through little by little on what you're going to show us here.
Yeah, I can kind of, maybe I'll just go start peppering you with, various examples. So maybe call it several different examples to kind of showcase what's inside. But just here's one. There's some existing prompts that were written, but this is one prompt where I don't know if you follow Jason Calcahonis from the All In podcast. He recently asked this, or maybe it was 6 months ago. Tell me the top 10 companies with 10 billion in revenue and 10% growth rate, and then sort them by the PE ratio. And then I also asked, backtest this using a long only equal weight portfolio with quarterly rebalancing over the last 10 years, and then use S&P 500 as a benchmark.
Okay, hold on. Before you go any further, wait, let me break this down. First off, here's one query, everybody. Tell me the top 10 companies with over $10 billion in revenue. That's one query. And then you had a 10% growth rate. That's two queries. Sort them by PE ratio. That's three queries. And backtest them using any long-only equal-weighted portfolio. That's another query. Quarterly rebalancing as well added in. That's another request. Over the last 10 years using the S&P 500. I mean, you're combining 7 different queries here in one, and then you click the button, and now it spits out these results. Sorry, I just want to kind of break it down line by line for everybody.
Yeah, no, that's a great synopsis. So here it kicks off and calls our screening agent, where you can see it's already pulled down this information in terms of the PE ratio, and then actually here's looks like the screen's a little blurry, but now it's getting down to
I zoomed in, so it should be good now.
Yeah. Okay. The portfolio optimization. So it's going ahead and kicking off an equal weight portfolio, as well as comparing it to the S&P 500. And so it's already computed down the results here in terms of all your typical standard candidates like maximum drawdown, annual return, total return, etc. And then you get other daily risk metrics in terms of the average P&L. It'll also look at pull a correlation matrix between all the positions and run stuff on that basis. It does give overall strategic assessment of weakness and strengths of the portfolio. Some high level stuff there.
Go slower through it. It's all scrolling so fast. I'm trying to kind of spend some time with. No, it's cool. And it's the reason I was saying that is because it breaks it down into so many different components here. And what I want everyone to understand is the amount of information from one query. So for example, it says recommendations for improvement. So with that query, which was, show me all these specific things, now it's saying that was fine, but based off other things I'm seeing, here's how you might be able to make this one better. So for example, reduce sector concentrations, limit exposure to correlated chemicals and material stocks. Okay, considering only 1 to 2 of DD, WOK, and IP instead of all 3. I mean, these are things that obviously need to come from your own personal analysis, your strategy, your trading plan. But I think that this is great at identifying, hey, this could potentially be a red flag. And sometimes we overlook these problems and challenges in portfolio construction. So I liked it, just on that part right there. It's already helping the average person kind of maybe play things a little safer.
Yeah, no, definitely. And then, then it gives the final conclusion, and then you get, the P&L charts embedded inside as well. So you get two charts here. Then the other great thing is, now you can download the stock screening results, or you can actually see the input data going in, and download the input data of the prices, open, high, and low, etc. You can also, here's the synopsis of the portfolio metrics. So here, this is actually a real thing, right? We're not, where if you compare it to Grok is trying to, grab this data from some random Twitter blog. Here, it's actually hitting our Snowflake tables, our databases. And so it's grabbing all that data from that basis.
And I love the verdict. The verdict at the bottom, in case anybody can't read it, says the verdict: the portfolio underperformed on a risk-adjusted basis. Investors would have been better served by the S&P 500 benchmark, which delivered similar returns with substantially less volatility and downside risk. Great if you have a strategy or an idea, and I know many of you in the audience you have ideas for portfolios. And I know some of you're carrying pretty big portfolios now, and this may help you at least identify pros and cons to your portfolio you may not have been aware of.
Yeah, definitely. And this is just one example from him, right? But yeah, so when it comes to like an individual stock, this is to showcase some of the other functionality. So I could say, tell me about Meta. So I just asked this just a few seconds before I joined the call. So it quickly hits our search agent, which would then pull down all the relevant news related to Meta. So and so that gives you some information there. Actually, here let me start a new chat here. So pick a stock, Merlin.
Let's see what was good today. Let's do FI. FI was down almost 40% today. So let's do FI.
Which stock is that? It's like
Fiserv. It's Fiserv. Fiserv.
FI.
S as in Sam. Let's just do Apple. Let's just do Apple. Make it easy. Let's do Apple.
Okay. All right. Sorry.
No worries.
So tell me about Apple. So this was so you can kind of see here. Boom! It kicks off. It calls our search agent. So it's going to pull down some related information. So hits TechCrunch, CNBC, some UK regulatory pressures. And kind of gives you a little social media sentiment. Apple's continues to generate some buzz here. Next is calling our asset analysis agent, which is going to try to start pulling down some data as well. So you'll see here it's already started pulling down some additional data. So here's just some high-level performance metrics, Sharpe ratio, cumulative return. For Apple since January 2022. We then calculate, technical analysis indicators that are done on our side, PE ratio, price to book, et cetera, et cetera. It gives you the recent analyst activity. So B of A Securities has a buy, et cetera. And then earnings outlook. So there's a ton of data in here. And then insider activity. And then finally, in the end, it gives you, overall like investment recommend, it's its version of recommendation, but it kind of assesses the strengths and the risks. Then it gives like a buy rating with caution. So it's a ton of great data in here, and you can download the data here, and you get some of the initial charting. So this is like the high level, top level stuff you can do with any stock. You just have a quick, question or want to understand what's going on.
It's funny.
The other thing
it's funny because when you said that real quick, let me just show the audience. When you brought that up, your system is specifically tailored because when you ask a question, tell me about Apple, right? I did the same thing. At the same time, here's ChatGPT's version of it, and what's it going to show me? Tell me about Apple. Well, it's going to show you some products and tell you what it is. It was founded by, it's like the whole history part. So like, okay, that's not what I wanted. Now I got to go and say, okay, show me performance histories on Apple. And I would have to go through every one of those little subparagraphs you had and start querying about all of those different subsets. So that's what I was getting at the beginning of this, where you have this efficiency module, if you will, where with one query, something as simple as tell me about Apple, I now have a full financial overview, especially for you fundamental analysis people, which I know we have a lot of fundamental people in my audience. This is an absolute game changer for you. I hate that term, but from a time productivity perspective, I've never seen anything that can produce that much data, charts, and analytics in under 60 seconds. It's not out there. This is it.
So, and then to kind of switch gears a little bit, so there's a ton of stuff in here. I'm just like scratching the surface.
Yeah. We can go slow. We can go slow.
Yeah. No, it's fine. The other awesome thing we just pushed is you can actually connect to your brokerage accounts now and have it analyze your portfolio. So here's just an example. Like if you clicked into portfolios, I've connected to two of my accounts. But if you wanted to connect to any of your portfolios, we have over there's about 20 or so in here. So, but most of these are like trading oriented, right? Mm-hmm. So you have Schwab, Fidelity, E-Trade, Alpaca, Tasty Trade, et cetera. So I just kind of wanted to showcase that. Then you'd have to click in there to, it prompts you to enter your password, etc. But this is it only just reads the data. It can't trade on your behalf or anything like that. It's just strictly to get in there to try to read your data, so that when you get here, you can see if I go into analyze portfolios, you also have the option to do a CSV upload or a manual paste or a PDF upload. Here, I've already done the connections of those portfolios, right? So I can select, let's say I wanted to use, analyze the Fidelity one. I can, select here. Maybe I don't want to include this cash position. That's kind of like $400 sitting there. It's not adding that much value. So I can click there. And then we have, some of these are like quick analyze prompts or prompts that are pre-written for you. Or you can just type in whatever prompt you want here and then kick it off and analyze the portfolio.
And I love what sectors am I overexposed to? That's great.
Yeah. So that has that. So I just ran this a little bit, or you can see I ran it at 425. So I'll just click to my shared chat just for sake of speed here. Although this just takes 1 minute, but you can see here, this actually, pulls down the positions. So obviously there's a lot of, Fidelity's Bitcoin exposure.
Say you're a little crypto heavy there. I think you're overexposed to crypto. You might too much Bitcoin there, buddy.
I know, very, very exposed. So it doesn't like my overexposure there. Technology, so it's a very high risk portfolio, probably, right? And then top performers, breaks it down on that basis. Maximum drawdown, BMNR is obviously very risky. Extreme Bitcoin, key risk factors. So that's like you said, kind of obvious thing. And then it gives a synopsis in terms of moderate concern, high risk positions. Also gives like a correlation analysis. So here it's saying AMD SPY has some level of correlation, and then here are some good diversifiers, etc. Then it gives a recommendation on what you should do, and gives some suggested target allocations, etc. So there's a ton of awesome stuff here.
Scroll back up. Just it's moving so quick. Just scroll back up. You had one that said portfolio. One more right there. I like things like this where it just gives you portfolio health score, and here's a 6.5 out of 10. Now I think when we all build our portfolios, we're looking obviously self-interested. We're saying, okay, this looks best for me. Here's what I think is going to be the best, and so recommended this position, that position. Quite often, I think we can overlook risks that might be present in the portfolio. So what was interesting in here, it says the strong historical returns driven by tech and crypto bull market, some defensive positioning with gold and TIP, and then quality holdings like Google and BRK or Berkshire Hathaway B shares. But then you get the weaknesses, right? I saw this right away, but dangerous Bitcoin concentration, 58%, excessive volatility exposure with BMNR, which is an Ethereum treasury. You got Palantir as well. Limited sector diversification, no international exposure, and overweight speculative growth at peak valuations. The reason I'm having stopped there is, if you're looking at this as your portfolio, and certainly this is a retirement account, so as a fiduciary, I would almost say, hey, this is a little too dangerous for you there, Toby. But I think for the average person, this is a great way for you to look at yourself and go, I didn't think about that, and maybe I should get some international exposure. Maybe I should diversify a little bit more. And with this, you could probably prompt it and say, hey, in order to help this out, what sectors should I look to diversify into? And it could give me some suggestions there as well.
Yeah, no, definitely. Then you get some basic charts here. You get a little correlation matrix as well.
Oh, that's cool.
Geek out and see the correlations of your portfolio. The other cool thing, just while we're sticking on the portfolios, is for the same portfolio, I also asked, I just said, hey, can you try to optimize my portfolio, improving the Sharpe ratio? So Sharpe ratio is basically your a risk-adjusted returns. Right. So it's just dividing your returns by volatility for those that don't know, but I'm sure a lot of folks know. So here it actually ran quite a few different portfolio optimizations. It just turned out in this case nothing actually beat my portfolio because it was we've been in like a crypto bull run, right?
Right.
So it's kind of hard to justify beating that. But you can also see in this case, it did run some sophisticated portfolio optimizations, something called the mean variance as well, and then compares it against this benchmark.
I was going to say, I like how I'm a big fan of, the S&P is the dog that wags the tail. And, when you're almost most of those, except the HPR on the mean variance, most of them were beating the S&P 500. So even if someone was looking at a different strategy or methodology, they could see how it stacks up against the benchmark. So it's nice.
Yeah. Then you get I'm going fast. The other cool thing is it will run, you get factor exposures. So we built this in. This is, I was excited about this for a portfolio. You can ask it, what's your sensitivity to like growth or market betas or volatility, right?
Okay, hold on. So wait on that one, because when I saw that number, I was like, "There's no way your portfolio has a beta of 0.74." Not with all that exposure to BMNR and Bitcoin. So this is saying that with the modified version that it's going to propose, your point. Okay, so this would certainly be, especially when we're at times like we are now, where people are concerned about a market crash and we're overheated, and we've been going up too long, and now we have quantitative tightening is going to end on December 1st, et cetera, et cetera. Maybe you'd want to go more defensive, and having a beta of less than 1 for your portfolio would certainly meet that objective.
Yeah, definitely. So then that could be an action plan, right? To start, trying to get ahead of the whole thing. And then you can see here's all the awesome data, right? So you have the input data going in, you have all these historical trades right here for each of these portfolios you can download. So this tells you right here, we're actually doing all the calculations on our side. So that's very, very powerful. And then you can also break down the portfolio, see across all these different back tests, what's the risk contribution that it's assigning to each one. It shows you the portfolio weights. So some obviously jacked up, like have too much overweighting on like tips, for example.
Yeah, the audience is asking to go a little slower here because you're going over some really cool stuff. But yeah, I mean,
apologies.
It's okay. For the audience, just so you understand, like he's got the one table here that's got these tabs at the top, and just simply clicking them, going through, like these are custom built charts exclusively for your portfolio. Like it doesn't get much cooler than that.
Yeah, and you can thank Tan because he's who you met. He's our front end guy. He's done a lot of awesome work.
He's awesome. Shout out Tan. Shout out.
Shout out. So that you get all these, for all these different back tests it ran, you can like break it down in terms of seeing all the allocations, right?
Mm-hmm. And it's also for those different portfolio types. So that one there is clicked on, right? Is on now. That's your buy and hold the 10 assets and kind of showing your portfolio versus the S&P. The second one he's going to click on, this is showing you the mean variance, which breaks it down to 9 assets and shows you would still be beating the S&P, but nowhere near at the rate you were before. And then the next one, this goes through each one of these different phases. I think
that might be a different modified. Here's a hierarchical risk parity,
which is pretty much the same, but it looks like it smooths out the volatility of your overall portfolio. And the advantage for this, everyone, is it allows you to look at how your portfolio, your investments that you chose, stack up against the overall market. Bring this guy to Yeah, and trust me, Louis says, bring this guy to OTA Trade. It's one of our platforms that we use. Maybe, there's another comment here from Oliver. He says, this beats having a financial advisor. Not gonna shoot that one down. I mean, obviously, when you have a financial advisor, everybody, they're a fiduciary and they have goals for you. But reality is, and from my perspective, most financial advisors are there to make themselves some money. This is unbiased information, right? This is not someone trying to sell you on anything. And this is what I think really important about data sets is it's saying, here's the facts as they are presented in the market. Here's the facts based off all the data that you see. Use it how you best see fit, as opposed to a financial advisor who's going to be like, oh, there's no way you should be in that much FBTC. Oh gosh, oh my goodness, get out. They would never your financial advisor would never let you get in a 58% portfolio allocation of FBTC without having you sign some kind of document. They're like, no, that's too risky. I can't be on the hook for that one. But having the charts and everything lined up in front of you, especially the way this is presented here, makes it just so much cleaner and easier.
And and we do have financial advisors using the platform because everyone wants to be more efficient, right, and like get better tooling. So there's so we are seeing a lot of interest from them for what it's worth.
Yeah, I'm sure.
But so why I can show you just on that fundamental data example here, just to show you what we have inside, because this alone people will pay for. So we have, I just asked, Mag 7 has been insane since 2020. Could you compare the trends in terms of profit margins, EBITDA, net debt, return on equity, return on assets, Altman Z-score, which is a like a bankruptcy score, and do this since 2015.
I mean, that's a massive query. And like I say, we were talking about just simple queries before. You're looking at so much different information there. It's wild in one query.
Yeah. Yeah. So then this pulls down. It breaks it down per each one of the fundamental factors. So current margin, looks at it relative to its 2015 baseline, and then also relative to all the Mag 7 stocks. So it gives you a very quick snapshot. And then here's some valuation multiples, looking at EV, EBITDA. And then so each one of the valuation metrics will pull, summarize it in this context.
Mm-hmm.
And then I'll show you, like at down below, you get the all the data. So now, not only that, you have all this data and the charts. So you can quickly like zoom through all the charts. There's like so many charts in here. There's no latency. You can kind of zoom through and analyze it from a time series perspective. Then you can also just download the data as well. So that's all available, or preview this data. So there's a ton of data here just on fundamentals. I just kind of wanted to highlight that. So that's where you could ask it, is NVIDIA over and undervalued relative to its peers or relative to its history?
Mm-hmm.
And it'll also answer questions on that basis.
So for me, it seems like DeepVest is this large language model, if you will, that is specifically designed for research in financial markets. Like, it's not going to go out and pull up the basic stuff that you're going to get from a ChatGPT or something. It's like, okay, we'll tailor all of this to be specifically for trading and investing. And I think that's where it caught my eye, right? Because I use AI platforms all the time, but not for this type of in-depth analysis. And I think to create a table, like if I want to create a prompt, to create me a table that shows the PE ratios of the Magnificent Seven over the last 15 years, I would have to probably go through there 3 or 4 times and tweak that prompt to finally get what I need. And it seems like it's all available, just kind of quick and easy.
Yeah, but then I would just question, where is ChatGPT getting that data, right?
Yeah, right.
So the same data, we're actually using a data source called Intrinio, but it's the same data source some of the top brokerages are using. I don't want to name names, but like some of the top trading firms that you saw when I went through, they're using the same data source. So it's as high quality as it gets, and it competes against Bloomberg. Some situations it's way better than Bloomberg, so it's just as good. And the beauty of it is we get data redistribution rights, so that's why I'm able to let users download the data and stuff. So that's been advantageous.
What sort of things are in the pipeline for you on this? Obviously, it seems like just since I saw you 2 weeks ago, you've added more features and functionality. Is there an end game for it all? Or is just kind of continuing to modify and adding more and more services to it?
Yeah, I think we're just having fun building this, to be honest. I mean, we're basically just listening to the users. So, especially as if hopefully you all are interested in trying this. So, yeah, as people use it and give us feedback, I try to generalize it to the best of our ability, and then we make a call and we just go after and build it. So even something as simple like someone told me, hey, wouldn't it be great if I could name my chats? Because it's almost so much going on. So you can go in here and name your chat. It's a really small thing, but here that just kind of lets you organize the information, right? So little things like that. And so I'm definitely open. In the future, we want to add in, let's say, like an earnings agent, for example, something like that, and start adding in forms of alternative data. So things like news sentiment, or could be one, or maybe credit card data. So stuff that would be also additive in that sense.
Cool. All
But
right.
yeah, I'm open to feedback. Let me know. So
Yeah, if you guys have questions we'll get to pricing in a second. But if you guys have questions,
yeah,
actually, I'm curious for the viewers out there today, and you don't have to be shy because
yeah.
he's here on the program with me. But what would something like this be worth to you per month? Like, what would you say? I would be happy to pay XYZ per month for this tool. And I know some of you would pay nothing because you're like, well, I'm just going to go and watch Trader Merlin show and he'll tell me what to buy, which is not true. I don't tell you what to buy. Some of you have other newsletters or channels that you watch and you follow those people, and that's how you get your investment decision. But for some of you, you know, what do you think the value this would bring to you? For example, I use Midjourney for my images here every day. That costs me, I think, $12 a month. For me, well worth it because I get AI graphics all the time. I pay for ChatGPT because I do a ton of writing. I love that it fact checks my writing, kind of makes it better because I'm a horrible writer. And a lot of people say I follow myself. I'll let you. How about you tell us the pricing here? Toby, go for it.
Oh, okay. I thought people were gonna say something.
Some are. I got 49. I got 10. Luis is cheap. Luis is 10.99.
Okay.
But Naum's going 49.99.
Yeah. So so currently the pro package I can just show you right here is $20 a month. So that's it actually gets you quite a bit, most of everything you've seen. So this and then the next pricing is a little more expensive at $500 a month, but this pricing is actually geared towards actually more financial advisors, I would say.
Mm-hmm.
And this pro pricing is more for self-directed investors. So this kind of showcases a lot of the functionality, but pro you get basically unlimited questions. You go a max 5 agents per question, so that gets you a lot already. So yeah, you get quite a bit with pro. So
yeah, I think I think for most, I think the pro would probably be the way to go. At $20 a month, especially for those of you doing a lot of research, the amount of time, effort it's going to save you is, in my opinion, well worth it. For me, I wouldn't use it enough to go for 500 myself, but I'm also not an institution, right? I just trade my own money.
Yeah. Yeah, so that's kind of how we're targeting it, and then the premium is more like hand holding, and we'll walk
Nice.
respond with urgency.
Yeah, yeah, I'm sure the 500 gets a little. You get the direct customer service line. I was trying to get a hold of GoDaddy today, and man, their customer support was less. I need to be on the $500 a month package over GoDaddy because they're terrible.
But having said that, I'm like we're still early enough that I'm listening to users. Obviously, I want to make that our priority. So please don't hesitate to reach out or give feedback and try it out. And we love to hear from you all.
Sounds great. We may need to collaborate. Are you going to be at the Money Show in Vegas in February?
Yeah, so I'll be attending that. So I'm going to go to all of them now.
So yeah, right. I'm definitely going to be there. I'm actually doing one on tokenization. That's a paid session. But I'm doing one on tokenization and a couple others on crypto. And I may talk to you about showcasing DeepVest to do crypto comparative analysis for the audience. So we'll maybe talk about that one as we get closer to that deadline.
Yeah, that sounds fantastic.
All right. Well, hey, Toby, anything else that you want to share with our audience before you go, or you're good?
Yeah, no, just super excited to be building this. Again, I would just say, our goal is to provide basically institutional grade tooling behind a natural language prompt. So there's a ton of stuff in here. I didn't get to show, all of it. We also have event back testing. So you can ask for certain events, for instance, like just a fun one. Do I have time to show one last one?
Sure, go for
it. Where is this? Just for fun, I asked, what was the impact of Sydney Sweeney's marketing campaign on American Eagle's stock price 90 days before and 45 days after?
I love it.
So it quickly pulled down, the total return before and after, Sharpe ratio. And then you get this nice impact chart of like the impact of the event. So anyways, this is kind of a fun one. But you can do this with any event date. So you can do it on like Brexit or Bitcoin halving dates. Someone just did it on like government shutdown, historical events. What was the impact there? Fed event dates. So it's a quick way to like get an assessment of like of market impact on certain that on various events. So,
Sure. I mean, you could even go as simple as saying something like, what was the market like 2 days before and 2 days after, President Trump's latest tweet, right? To see the impact of these things. Pretty cool. Pretty cool that you can, and then create the chart for you. That would be very difficult to do on your own. Good luck with that one.
yeah. So so just please reach out, and thank you so much, Merlin, for having me on your show.
My pleasure. And if you go over here, you go to DeepVest.AI. You just go to the homepage. I'll drop it into the chat here so you guys can have that one on your screen. Check it out. There is a free version. There's a $20 version, which is, I think, more than sufficient for what most of my viewers would want to have. But awesome stuff. Thank you very much. I appreciate you taking time. We can get you back to parent duty right away.
All right. Thanks so much, Merlin.
All right. Take care. Thanks for coming on. All right, guys. Hope you enjoyed that and learned something along the way. A lot of crazy information. It's almost too much, I'll be honest. Some of you typed in there that was overwhelming, and I agree. It is overwhelming. And, it reminds me of the first time I used a Bloomberg terminal. First time I used a Bloomberg terminal, I was like, I have no clue what to do here. And someone's like, oh, if you hold down F12 and type in PX $QP, you'll get all the charts you need. It's like, what? Once you get the idea for prompting, it gets a little easier. But the reason I wanted to bring Toby on to talk about this is, I did a query at the same time he said, tell me about Apple. And all I got was historical information and just kind of boring stuff. His is just specifically tailored. So for some of you, Andre says it's bar chart with steroids. I would say it's a whole different ballgame altogether than bar chart. Bar chart provides you with a ton of charts and data, but you have to go find every single piece of it. And it would take you forever to build these crazy chart overlaps and relationships. The last one that he just did, I think, really speaks volumes to it, which is Sydney Sweeney did the ad campaign with their jeans. What was it like 6 months before or 45 days before and 15 days after? And you can see the impact of an event specifically on a company or on a market. And I think that is just takes so much time to build out. I will probably myself go for the $20 version, and I might use some of it on here. I mean, it's just great information and great data. But it was moving pretty quick. Even when I was at the exhibit hall, it was just moving so fast and there's so much information. And ultimately, I think it boils down to, what do you need? What do you want? Right? What sort of information are you personally looking for with your investment style? And I know many of you have your own strategies and own ways of going about it. But for me, $20 a month, $240 for the year is a drop in the bucket for something so powerful, especially with all those charts and everything else. So thanks, Toby, for coming on. It's Toby Wade. He's a PhD. He works for DeepVest.AI, and I had that page up there. If you guys want anything more to know about that, you can visit their page. And there you go. Luis says, go with the 500. I don't think you need to. I definitely don't think you need that 500. That 500 is way too many queries and just too much. All right, Tiger. Sydney Sweeney has great genes. Yes, she does. Yes, she does. All right, let me, for the sake of time here, I only have a few minutes left. I want to get to what happened in our overall market today. So obviously Jerome Powell said rate cuts. Yeah, we knew that. It was a foregone conclusion. The difficult part was, what does he say at the press conference? And he said by no means is it a foregone conclusion that we're going to get a rate cut in December. And remember, yesterday was a 92.9%. Today, it has dropped to 68%. It seems actually kind of weird now because we are presently. This seems like it's shifted here. But the odds of a rate cut in December have dropped dramatically, right? Dropped dramatically, and we'll see if that actually happens or not. There was a bunch of interesting dot plot information, which I'm going to talk about with Bill Addis on tomorrow's show. Bottom line is, how did our markets react? Well, I actually bought puts expiring Friday on the S&P 500 today. We'll see if that backfires on me. It was looking pretty good for a little while. Now, because of the Fed announcement, it just kind of, I don't know. We ended up fairly unchanged on the day. It was only down 0.04% as we speak right now. I was waiting for that breakdown, and as it did, ended up buying some puts on the S&P. We'll see. If it all goes to pot, it only cost me about $1,800 on the S&P. But I did buy them for Friday. I bought real short term here, which I normally don't do. But I'll walk you through from bottom to top. Bitcoin not looking so good. Of course, a rate cut, well, you would think that would jack up Bitcoin. No, it did not. Bitcoin looking pretty ugly out there today with almost nothing but a red candle. Right now at 111,000 and change. Not good, down 2.29%. Even the Russell taking a big dive today, although still in an uptrend, right? Still an uptrend. What's going on out here, Big Eb? So what happened? I'm catching small little pieces of a conversation, so my apologies if I didn't see the chat there. Sykes Chair says, how far down in time frame would you use your spinning breakout strategy? It's not really breaking down in time frame. If I go back to this S&P 500, for me it was on a break below it, right? So it was off the spinning top from yesterday, and that was below 6,900. So as it broke 6,900, that was where it jumped in, and there we go. But yeah, spinning top is, I just put a line on the top of it, line on the bottom of the spinning top, and if it breaks down below it, I'm shorting it. If it breaks above it, go. So it really doesn't have a time frame associated with it. It's just all pure price base. NASDAQ, doing good because of tech, but I guess in the after-hour session, we got to take a look at Microsoft, Google, and Meta, who all reported earnings today. Let me bust this down to a 5-minute time frame so we can check that bad boy out. I'm going to zoom out here. Let's go to Meta, which, not looking so good, down 8.2% as we speak. What's interesting is right now Meta has fallen into the zone where I made that trade last time off of it and bought. I'll see tomorrow morning if I feel like doing that. But you can see this yellow box, right? The yellow box was the initial demand zone that I purchased back here on October 6th on Meta. My shares were taken away with call options, but right now we're below that, right? We're at 689 and change in the after-hour session, which is it's below that area of demand. Still might make for a decent buy point. All right, so that was Meta. Google actually was up last time I checked. Google's up 6.63% in the after-hour session. So not only did it have a 2.51% up today, it also, on a 5-minute time frame here, vaulted on that earnings announcement. There's your big popcorn trade of the day. Let's use the graphic. Come on, let's use the graphic. There it is. That was pretty much what their chart looked like, although it kept on going higher and higher and higher for that popcorn trade of the day. Now, if you look at the third one, which is a victim, Microsoft. Microsoft was down almost a little over 2%. Now it's only down 1.8% in the after-hour session. You can see here they still beat earnings. They beat their earnings number, but apparently what was said at the press conference, or what was released to the public as far as why and going forward estimates, not looking very rosy. Now, if you're looking at Microsoft, it's fallen all the way to dead center right now of that spinning top from October 27th. Only a couple days back, but I still think you'll probably see some more downside movement here and maybe even get down to that gap up candle right around $523. So that's your big stuff. Google, obviously the big success story, just rocking to the upside. Meta may be a play for me for tomorrow. We'll see how I feel about that one. We talked about Cat the other day too. Nice day for them. Cat, what is it? Meow. Oh, man. Still just continuing a phenomenal trend. Now, Big Eb, we talked about the trend being your friend until the bend at the end. But remember, I also have another theory, which I talk about a lot, which is that rubber band theory. And if we look at that, the moving average, let's take it, that's my arm. And for those that can't see this right now, I've got my arm probably about a 30-degree angle facing upward. If I take a rubber band, I put it around my wrist, and I lift it like 1 inch and let go, no big deal. But if I take it like 5 inches away, that's going to hurt. And if you look what's going on right now, it was sitting on the moving average. And what moving average do I have on here? Did I tailor it? 50. Okay. So I had the 50-period moving average on your screen here. It's been looking great. We've been saying stay long because the trend is up regardless of what your thoughts are on CAT. It's just trend. Last time it was touching the moving average was back in September. It's been accelerating above it. And if you look at that rubber band analogy, look how far away we are from the moving average right now. That is extremely stretched out. And this might be one of those situations where you short it with the expectation of price coming screaming back towards that moving average. I don't know much about Caterpillar other than their business, but in fundamentals, I don't pay attention to that at all for Caterpillar. But to me, this seems extremely overextended. And I could scroll back here. I would challenge you to find any point on this chart where price is as extended above that 50-period moving average as it is today. There isn't one. I mean, it's so far above that moving average. I'm going to scroll out here and see if I can find anything that comes close. Maybe back here in 2021, but still relatively close to moving average. So I would be concerned about that one. It just seems so unbelievable. Oh, here we go. Back in 2018. Notice almost the same picture, right? It was pretty much on that 50-period moving average. It got really extended and all of a sudden came crashing back down. Caterpillar is a great company. There's no argument there. However, this is unbelievably extended so far above that high. Man, I'll tell you, And I look at this and I just feel like shorting it right away. Lisa says, I think with all the natural disasters, cat will continue to rally. Need that big equipment. Sad. Yeah, true. I definitely think so. I think that there's a need for the equipment. However, share price doesn't necessarily mean that they're selling all the equipment. It could be just hyped up share price, right? A lot of companies don't deliver. We could look at the numbers and see what they're delivering, I guess. But I'm just looking from a pure technical perspective. Cat is looking a little bit frothy. I mean, look, what other companies are looking amazing, right? You NVIDIA. NVIDIA, yes, has pulled away, but that's just because over the past few days, and that's because of the that tech talk that Jensen Huang gave, right? And just really promoting all the different things that NVIDIA is buying into and supporting and partners and more chips and more chips and more chips and more chips. This will probably come back down as well, but I don't think it'll be as deep. NVIDIA is still flooding the market with their product. There's just too much demand for their product. They can't even achieve it. So run cat on DeepVest. That'd be an interesting one. I don't have it, TD. Unfortunately, I don't have it signed up right now. I'll see if, I'll probably subscribe to it, get DeepVest, just so I can kind of show you some of those things. But yeah, it would be interesting to see what they say. And maybe what we could do is do a show me cat stock price and how it lines up with the most recent natural disasters, right? That would be pretty cool too. Man, that would be a great query. Here's why I don't want to get the DeepVest software. I don't want to get it because I know myself. I'm going to go down the rabbit hole, and next thing you know, I'm going to be up for 36 hours drinking Dr. Pepper with juice with caffeine, trying to find all these cool charts and setups. I know myself. I'm going to go into that rabbit hole on DeepVest. It'll happen. They're using CAT to build the infrastructure for chips. NVIDIA's building new... There you go. I guess that would make sense, Ollie. I guess that would make sense. Oh, crypto, you using it? Nice. Steve says too much information, not always good. Right, but it's up to you to refine down to what information that you find useful and look for the things that you feel are beneficial. So, all right, let me run through this top 10 because I'm not doing an hour show today. We made it to the NASDAQ, which is obviously driven by the tech names today. Look, you got two of them down and one of them up. I think that we will probably see more downside potential based off of that, because you have Microsoft down 1.8%, Meta's down about 8%, and Google's up. Microsoft is more powerful and weighted on the NASDAQ 100. If we look here in the after hours, I'll just show you a 5-minute. Definitely got a lot of whipsaw, but down in the after hours just a little bit, just slightly for your NASDAQ 100. All right, moving up our list, we go from the NASDAQ to that dollar index, which is up 0.41%. I mentioned on yesterday's show that I was a little concerned, not concerned, but suspect as to what this last few days has shown us for the dollar index. It's really quite small ranges, but end of the day, finishing right where it was at, not a lot of change. And then today we get a nice big surge up in the dollar index, 0.4. I right now would be going with the shorter term trend, which started back here on September 17th, which means to me that if this does continue, the moving average is curling back to the upside, that we should see that dollar start to increase. Even though I can't say it enough, you've got Powell and Bessent saying they want a weak dollar. It's still looking good. Gold. All right, gold is still in that yellow box. We were looking at this one yesterday thinking we might see a nice big pop to the upside on it. Well, we didn't get one. It was up 0.44%, but I still believe that in the grand scheme of things, this is a buy opportunity. And look at the chart of this one as well, right? This looks just like that chart of Caterpillar, where it just went parabolic, overextended itself above that moving average, and then came back down towards it. A lot of times it'll actually come back down through it. We didn't get that yet on gold. Crude oil is up 0.55%, offsetting some of those losses from yesterday. I still think that crude oil is going to drift lower here just because the trend is your friend until the bend at the end. But who knows? That was one of the most volatile asset classes out there. And finally, this is something we didn't want to see. The 10-year yield surging. Remember, we talked about the Case-Shiller Composite 20 Home Price Index looking ugly. It was 1.8%. Now it's 1.4%. That's not good because it means that home prices are not appreciating, which could cause some people to flip and end up going underwater on their homes. We shall see, especially if prices start to drop across the nation. If we see this yield continue to surge up, which the chart would tell us that it's not going to, right? We would look at this and say, most likely the yield is going to drop because that's what the highs have been telling us. That's what the moving average is telling us. That's what the lows are telling us. It's the higher probability here is to the downside. However, everything works until it doesn't. Trend is your friend until the bend at the end. If we get above 4.2% on this 10-year, I think the housing market's going to really start to feel some pain because it's already feeling pain with low yields. And if the yields start to jump, housing market I think is going to feel a bit more, and that could cause more grand scheme problems, which of course is the topic for tomorrow with Bill Addis. We talked that about with Jerome Powell. Jerome Powell in the FOMC meeting today was interesting. There were certainly some comments that were made, but I'm going to save all that for tomorrow's show. Let me see what he guys says. What does Cat have that Volvo, Deere, and et cetera don't? Yeah. Big Eb says global wide recognition. That certainly is a piece of it. I mean, everybody knows who Cat is, but you go international. There's a couple other names that are more popular than Volvo and Deere. I can't remember off the top of my head, but I remember traveling through Thailand. I didn't see Volvo or Deere. I saw Caterpillar, and there's another one. They're orange. It was an Asian brand, I think. But there certainly are other companies out there in that space. Certainly other things out there in that space. For me, looking at that chart of Caterpillar, it does scream of short opportunity here soon. Yes, Andres, quantitative tightening coming to an end. Oh boy, that's not a good sign, because there's a lot more that they need to tighten. Right? They still have an incredible amount of money that they printed out of thin air, and that's going to may cause problems for the market. So we'll talk more about that. Husqvarna is certainly another one, but there's a different. Hyundai is a big one international. Yeah, absolutely, MJ. Hyundai was huge when I was in Vietnam and in Thailand. That might have been it. But yeah, there's definitely a lot of other big brands out there. So yeah, let's talk about Jerome Powell tomorrow with Bill Addis on the program. Again, I hope you guys enjoyed Toby Wade of DeepVest. To me, that platform offers a ton of functionality. Amazing research tool that Mitsubishi, there you go. All right. RN, he's got it. And Psych Cheer says, there it is, Komatsu. That's the one that I see international. I'm like, Komatsu. It just seems so strange. But yeah, there's a ton of them out there. Anyway, I hope you guys enjoyed Toby Wade. Refreshing to see someone who is actually building a platform, a software that's designed to make our lives easier. And for some of you, it's not relevant, right? You're going to pull your information from the sources you have. In my opinion, with something like DeepVest, you can cancel your subscriptions to a wide variety of other services because you don't need really necessarily data anymore. You have it all in there. You actually don't really need to subscribe to newsletters anymore either, because the newsletters is someone's opinion about the data, and usually that's a jaded opinion, which is okay. I mean, I have my jaded opinions as well. But with DeepVest, you're getting its analysis hopefully with an unbiased opinion. I don't know what their algorithm or how it's written their large language model, but there certainly could be some bias in there. Anyway, I hope that was something of value, just so you guys can see how amazing AI can be in making our lives easier, particularly for those of you who are doing fundamental analysis. Tomorrow, Bill Addis is our guest on the program. We're going to talk about, obviously, the FOMC, Jerome Powell, quantitative tightening coming to an end, and much, much more. So if you guys have questions, comments, feedback, things you'd like to see, you can email me. Email's on the screen at tradermerlin@gmail.com. You can send them on in there. And if you have questions for Bill Addis or anything else, send them there as well. If you're new, hit that subscribe button or like button, and I will see everybody tomorrow. Take care.